It's entirely possible that Tesla is Amazon and that there was no second Amazon.
Dan, what gets you to 1,400? What gets you to 1,800?
Well, it's China. I mean, right now, I think the China story, that's worth $400 a share to Tesla. You're seeing acceleration, not just in China, but globally as part of this green tidal wave. I think for Tesla, this is a company that could do 1.4, 1.5 million units next year. I think half that pie is Tesla, $2.5 trillion.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, Jim Cramer hypes up Tesla stock and Dan Ives, Wedbush analyst, discusses his $1,800 bull case price target for Tesla stock. I'll also be shamelessly promoting my latest merch design, the I'm all in on Tesla stock merch, available in t-shirts, long sleeves, hoodies, mugs, phone cases, and plenty more. If you don't already have yours, check out the card in the corner or the link in the description. And thanks to everybody who's already picked one or two up. Now over 150 units sold, so thanks so much for your support. We'll also take a quick look at two extremely insightful leaked emails from Elon Musk to all Tesla employees. In fact, let's do that right now. So here we are over on the CNBC website, the first of the two leaked emails sent back in October, only just now surfacing. From Elon Musk to everybody. Subject: music in the factory. Just wanted to say that I very much support music in the factory, as well as any little touches that make work more enjoyable. Now I just want to take a quick moment here. For everybody watching, just imagine if you receive this kind of an email from your boss. I know people have different experiences. I've certainly worked for a couple of gigantic douche lords. I would have been shocked to receive an email from my boss suggesting that they wanted to make my work experience more enjoyable. Let me know in the comments below, would you be surprised to get this kind of email from your boss? Or are you not working for a gigantic douche lord? Let's continue. An associate just sent me a note asking if we could have one earbud for music so the other ear can listen for safety related issues. That sounds fine to me. Pun not intended. Also, ambient music from speakers is also totally cool so long as there is reasonable agreement among your colleagues as to the music choices. And the most insightful line from the entire email: if there are other things that you think would improve your day, please let me know. I care very much that you look forward to coming to work every day. This is a very compelling insight into Elon Musk and the kind of leader he is. He genuinely wants his employees to enjoy coming to work and is asking them if they have any other ideas of how to make their time at work even more enjoyable. Please let him know. A second email from October. This one also extremely insightful. If an email is sent from me with explicit directions, there are only 3 actions allowed by managers. 1. Email me back to explain why what I said was incorrect. Sometimes I'm just plain wrong. And speaking of just plain wrong, I had an experience like that myself last night. Lost a bet with a friend. I initiated the bet. I was adamant I was right. Turns out completely dead fucking wrong. 2. Request further clarification if what I said was ambiguous. 3. Execute the directions. If none of the above are done, that manager will be asked to resign immediately. Thanks, Elon. Really insightful, right? Elon Musk really wants all of the Tesla employees to really look forward to coming to work every single day. And also, Elon Musk won't put up with morons, stupidity, or any bullshit. And finally, in today's video, I'll also be reminding and encouraging everybody who isn't already supporting the channel on Patreon, you probably should. Check out the card in the corner or the link in the description. It's not because I need the money, but because you'll gain access to a ton of exclusive Q&As, a bunch of exclusive content. Everyone also gets access to my always up-to-date Tesla stock price targets, and supporters at the investor tier or above will also gain access to my Tesla valuation model. So what are you waiting for? If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously, free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
Dan, what gets you to 1,400? What gets you to 1,800?
Well, it's China. I mean, right now, I think the China story, that's worth $400 a share to Tesla. You're seeing acceleration, not just in China, but globally as part of this green tidal wave. I think for Tesla, this is a company that could do 1.4, 1.5 million units next year.
Dan Ives and I are on the same page here. I think unless there's an asteroid impact that wipes out one of Tesla's newly constructed factories next year, hey, could happen. I expect they'll easily clear 1.4, get closer to 1.5 million units. And in a best case scenario, if things ramp relatively smoothly in Berlin and Austin, Tesla could easily do in excess of 1.6 million units.
On these margins, it's why we raised the price target. And you talk about the bull case, that still does not include FSD, robo-taxis, and others, which could be incremental.
Interesting, Dan Ives' $1,800 bull case price target for Tesla stock doesn't include anything whatsoever to do with robo-taxi.
So, Dan, does this mean that like the likes of Rivian, for example, or Lucid or NIO, like they're not going to go anywhere, or is there room for all of this in the EV pie?
Well, it's a $5 trillion market over the next decade. And, that's why what you're seeing with a lot of these EV stocks continuing to go up, because this is the biggest transformation to the auto industry since 1950s. I think half that pie is Tesla, $2.5 trillion.
This is a curious comment from Dan. So he's suggesting that over the next 10 years, the entire electric vehicle market, obviously not including energy, robotaxi software, blah, 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 but just the actual vehicles being sold themselves, is worth about $5 trillion. And he expects Tesla to capture 50% of the electric vehicle market, aka about a $2.5 trillion market cap, about a 2.5x from where we are today. And again, this isn't including other elements of Tesla's business. Gotta say, I disagree with Dan Ives here on two fronts. One, I think the pie is going to be a lot bigger than $5 trillion. I think he's massively underestimating EV adoption. We'll hear more about that later. The second thing is I also don't think that it's probable. I mean, technically, yep, sure, it is possible, but I don't think it's probable that Tesla captures 50% of the electric vehicle market in 10 years' time. In my opinion, in 10 years' time, the global EV market is the global automotive market. Nobody with a functioning brain will be producing or buying ICE vehicles at that point in time. That would suggest that Tesla's doing around 40 million vehicles per year, double their stated goal of around 20 million units per year at the end of this decade. I mean, it is possible, but I think it's pretty unlikely.
The other 2.5, that's going to be up for grabs for the likes of a GM, Ford, VW, a Lucid, a Rivian, and others. And that's what investors are playing here in terms of who those winners are as part of just this massive jump ball in the auto industry.
Dan, we've just seen Build Back Better passed in the House. We've obviously got the infrastructure bill. That looks like it's going to go through. How big a part of the puzzle, the kind of the conundrum here relating to how quickly we can make this EV story works, depends on that infrastructure money being spent, depends on the US catching up. Range anxiety remains a real worry for many potential EV buyers.
Maybe it's because I live in a Tesla bubble here. Let me know in the comments below, but do you guys and girls think range anxiety is still a thing? I mean, it's not 2010 anymore.
Yeah, it's a great question. And US has lagged. Clearly China, which is over 10% EVs, and Europe as well. I think this is a watershed event in terms of the bill, because it leads the seeds to what's going to be much more infrastructure building around charging stations. Need to get to 500,000 charging stations by the end of the decade, only 100,000 today, as well as just grid upgrades and others. And I think this is just that first step. Today, 2% of automobiles are EVs in the U.S. We think by 25, that's going to be 10% and 25% by 2030.
Hey, Dan, Apple is apparently working on its Apple Car, looking at a fully autonomous vehicle in just a few years. Is Apple going to eat Tesla?
Interesting question. Let me know what you folks think in the comments below. Do you think if or when Apple ever actually releases an electric vehicle, they've only been working on it for a decade and nothing to show for it so far, that they will eat Tesla?
Well, look, I think for Apple, it's a matter of when, not if, they get on the Apple Car. We view that as anywhere from 2020 to 2025, and I think the report yesterday confirms what we believe is going to happen. Now, it's not a zero-sum game, so we don't view Apple getting it as necessarily killer for any of the other names like a GM, Ford, but it speaks to this massive market opportunity. And we also think there's an 85% chance that Apple could partner with the likes of a VW or the likes of a Lucid or Ford or a GM in terms of that, rather than doing it themselves.
A partnership between an automaker and Apple might make sense for an electric vehicle, but Here's the problem. At this point in time, there are no electric vehicle makers besides Tesla who have a compelling enough product that it would make sense for a company like Apple to partner with them. Everybody else still needs to prove that they can produce vehicles at volume with high quality before it would make any sense for Apple to consider a partnership. Now, you might argue the other side and say, well, couldn't they have acquired one of these startups like Lucid before they IPO'd, get in early, get the tech? Maybe. But the problem is, Lucid haven't ramped to volume production yet, so it'd be a massive bet. I think Apple are a fairly conservative company. They really want to make sure that they hit it out of the park. So maybe in the future a partnership does take place, but there's no viable partners other than Tesla at this point in time. And what would Apple be bringing to the party that Tesla isn't already doing well?
You have talked, though, about how you would advise investors in these stocks to maybe move in and out a little more frequently.
Now, I do want to give Jim Cramer a fair chance to answer this question, and I'm also going to try my best not to make a joke about your girlfriend and moving in and out more frequently, but I do just want to pose the question to everybody watching. How many people who trade in and out of stocks regularly actually make money doing so? Now, I don't have the exact figures on hand, but I'd say it'd be somewhere around 0.0000000042069%. Thereabouts. Now, to be fair, it's not 0%. Some people can do it. There's a few people out there with an IQ of 169 who actually manage to make money regularly trading in and out of stocks. And then there's everybody else who simply loses money and would have been better off to just buy and hold good quality assets over the long term.
Because you never know what's going to happen, and they have seen some real big love that they've gotten in the first few weeks since, let's just say, Rivian's IPO.
But I think that there's an element of responsible speculation that's almost impossible here because there's so much, I wish I had gotten Tesla-itis, that everybody's angry. I mean, the way to get back at themselves the way to stop kicking themselves over Tesla is to go buy Rivian, go buy Lucid.
Jim Cramer has absolutely hit the nail on the head. For example, in my opinion, literally 100% of the market capitalization at any point in time achieved by Nikola, obvious scam of a company, in my opinion, Motor Corporation, was due to either people who are just so fucking incredibly dumb that they believe BS from Trevor Meltdown Milton. I mean, how did anyone buy any of the garbage that guy was vomiting out? Or were just so angry and emotional at themselves for, quote, missing out on Tesla. Spoiler alert, as per my exclusive price targets on Patreon, card in the corner, link in the description, you haven't missed out on Tesla yet. But hey, you won't figure that out until you see what Tesla's worth in 2031. Now, I do get some pushback when I discuss the utter insanity of Rivian's valuation, of Lucid's valuation, the insane price that the stocks of both of these companies are currently trading at. But I do want to point something out. Just because a company sets a goal, we're just going to produce this many vehicles by this year, doesn't mean they'll actually do what they say they intend on trying to do, the keyword there being trying. They might, and in the case of Lucid and Rivian, I genuinely hope they are actually able to achieve these incredibly ambitious and extremely unlikely goals. But I do believe the odds are stacked heavily against them. The same would be true if I were to meet a guy who 1. Lives in his mum's basement, 2. Hates himself, 3. Is extremely insecure, 4. Happens to be an adult virgin, 5. Lacks confidence, 6. Has literally no ambition, 7. Is extremely unsure of himself, and 8. Is capable of instantaneously transforming Niagara Falls into the Sahara Desert. I'll explain when you're older, claiming that he's going to transform into an absolute lady killer. It's possible, but I wouldn't be betting on it. I would personally need to see some proof and some execution before I gave this guy credit for what he was claiming he was planning to do. But hey, that's just me.
But there may only be one. I mean, but it's entirely possible that Tesla is Amazon and that there was no second Amazon.
Well, it's entirely possible that one day Jim Cramer's going to figure out that this isn't actually possible. This is already the case.
So even though I like all these companies' cars and they look really good, the idea that they could have 17,000 reservations for a Lucid and you could make 17,000 Fords in a minute and somehow Lucid's worth more than Ford does create problems mentally. But I will say that Lucid's cars I'm sure they're going to sell out and Ford's aren't. But anyway, look, I said to club members, the best way is to play Ford, because if Ford decided out of nowhere that they just wanted to be an EV company, they would be worth a lot more than they are selling right now. And that's kind of a strange thing, but if they shut down everything but EV, their stock will be worth more than Lucid.
Getting more bullish on Tesla. That's Dan Ives of Wedbush. He's coming out with a new note and putting a $1,400 price target on the automaker that matches the highest target that's out there. I think Jefferies is the one that has the same target on it. Dan is joining us now. Dan, I'm curious about the timing of this call and why now is the time to come out and say that Tesla's going to make this next push.
Yeah, it's because of all of our checks and focus on the China market. I think right now China is accelerating going 2022. And I think that's worth $400 a share of the Tesla story. I think they're going to continue to be able to accelerate that. That could be 40% of deliveries next year. This is really a China-driven price target increase, but also in terms of what's going on across the world. I mean, we're seeing this green tidal wave play out. It's a $5 trillion market, and I think a further re-rating in Tesla continues to happen.
Dan, why aren't you fazed much by Elon Musk selling down his stake?
Well, we always assumed he was going to sell 5 to 6%, just given the call it 12 to 15 billion tax bill coming. Now, the fact that he did it in a Twitter poll, that could only be one company and one CEO that ultimately does that. But from a PR perspective, I mean, that I think ended up being a win, because if he just started selling stock, indiscriminately and without sort of notifying, this is a stock today that could be $850, $900.
I think this is a fair point from Ives. If Elon Musk had just started dumping Tesla stock and nobody knew beforehand that he had any intention to sell whatsoever, I think Tesla stock would have experienced an absolute bloodbath. I'm not going to lie, I would have loved to see Tesla stock get absolutely slaughtered. The cheaper I'm buying it, the better over the long term. But I think most Tesla shareholders are probably glad that Elon Musk did mention this before actually beginning selling.
But Musk is part of the cachet and part of the genius that is Tesla. And that's what they've built. And right now, you're seeing this sort of market share gains accelerate, but it's not a zero-sum game. I mean, GM, Ford, Lucid, others are going to be significant beneficiaries in terms of how we sort of see this accelerating into the next 12 to 18 months.
Dan Ives has really gobbled up the GM Mary BS Barra Kool-Aid on their transition to electric vehicles. Now, I acknowledge there's enough dumb people out there, especially investing in the stock market, that GM stock could actually benefit enormously over the short term. But as I've said, they are absolutely fucked. They've been too slow, their technology sucks, their leadership is incompetent, and they're not going to survive the transition to EVs. You can count on it.
Well, and all those other guys are a lot cheaper, like in terms of valuation, in terms of just absolute stock price. I mean, why not counsel investors to maybe buy the ones that have more upside?
Great question. Why not tell investors to board the Titanic?
Well, I mean, GM, we view bull case $100 next year. I think GM is just a massive re-rating story on EVs. But I think when you look at the pure plays, and you've seen it with Lucid, you've seen it obviously with a lot of the excitement of newcomers coming out. And of course, you see it in Tesla. These are really growth transformation stories.
This guy's career is going to be over in a few years. I mean, honestly, a growth transformation story. Dan, sit down. We need to have a chat, okay? This is not a growth transformation story. This is a getting fucked in the ass and going bankrupt story because you were too slow. You don't know how to make EVs. You don't have the engineers. You don't have the technology. You don't have the experience. You don't have the leadership, and you don't have a chance.
I don't view them as auto stocks. I view them as disruptive technology players. And it's an arms race in terms of what I view as the biggest transformation to the auto industry since the 1950s. And that is really how you're seeing this just massive shift in terms of the way the street's looking at auto companies. And you've seen it in GM and Ford. I think you'll see in VW as well in terms of that re-rating.
Dan, a tweet from Ford CEO Jim Farley caught my attention last night. He said, quote, "We are now expecting to produce 600,000 EVs a year globally by the end of 2023, 2 times our original plan." I mean, Farley at Ford is absolutely fired up. I mean, does Elon Musk need to be worried about what Ford is cooking up?
This is kind of funny. We need to reverse this question. Should insert legacy automotive manufacturer be worried about what Tesla are cooking up? And the answer obviously is yes. That being said, as I've said recently, Ford are showing promising signs. It's definitely not a certainty that they will go bankrupt this decade. I think it's a bit of a coin toss, whereas somebody like General Motors are literally guaranteed to go bankrupt before the decade is done. Jim Farley is making some moves, acknowledging that Tesla are in the lead and that Ford can learn from them, that they want to catch up, so this is quite promising. Meanwhile, you've got morons like Mary B.S. Barra over at GM claiming that they're going to catch up to Tesla by 2025 and also saying they're already the world's leader in electric vehicles. Complete delusion, just absolutely insane. So as I've predicted a million times in the past, and by the way, this is going to continue to happen in the future. It's not over. We're seeing another legacy automotive manufacturer, this time Ford, massively accelerating their EV plans. This time, literally doubling their goal for electric vehicles produced in 2023 to a whopping 600,000 electric vehicles. Wait, how many did Tesla produce in 2020? It was almost 600,000, wasn't it? How many will Tesla be producing in 2023? Around 2.5 million. More than 4 times what Ford is aiming to produce in 2023. So hopefully that clears up the matter about who should be worried about who.
I mean, Farley's he's had the golden touch so far. And I think you could also say for what Mary's doing at GM.
This is career-endingly bad commentary from Dan Ives. I mean, honestly, the guy just implied that Mary B.S. Barra over at Genuine Morons, Government Motors, what are they called again? GM, has the, quote, golden touch when it comes to electric vehicles. Let's think about that for a moment, Dan. Was Mary Golden Touch Barra the CEO of General Motors when they publicly and embarrassingly announced a partnership with an obvious fraud of a company, allegedly, in my opinion, do your own research, blah, 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 blah. Partnership, a deal, which I instantly picked apart on YouTube, pointing out enormous red flags that made it obvious that this company had nothing but vaporware, and there were some huge anomalies in the deal that made no logical sense, seeming to suggest that GM were acting from a place of desperation and stupidity rather than strength. Did Mary Golden Touch Barra appear in the mainstream finance media praising an obvious con man, Trevor Meltdown Milton, publicly talking about how important this deal was, how it validates GM's technology? And then did GM have to back out of this deal when the allegations of fraud, lying to, misleading, deceiving investors, Department of Justice investigation, and SEC investigation into Nikola total fraud of a company Motors actually became public? Did that happen? It did. Talk about a golden touch, but wait, there's more. Was Mary Barra also the CEO of General Motors when they invested in another fraud of a company, in my opinion, Fraudstown Motors, something like that, Lordstown Motors? Was their CEO another con man just like Trevor Meltdown Milton, making false and misleading claims to investors and then being forced to step down as CEO? Did this also happen? It sure did. So I don't know about you guys, but personally, I think Mary should probably keep her golden touching to herself. Don't think about that.
But they're diving into the deep end of the pool on EVs. That's what Farley's doing. And that's more and more what the re-rating is going to be in terms of, they could even lose share in traditional ICE. You gain in EVs. This is a stock that could go much higher. And I think that's a smart move in terms of the conversion opportunities we're seeing. I think the Biden infrastructure bill, from tax credits to charging stations, that's just the first step in what's going to be this massive green tidal wave playing out.
So I hope you guys have enjoyed this video. Dan Ives continues to be a mixed bag. I think he's pretty close on Tesla. I think he's completely off the mark on General Motors. And I don't know how this guy still has a job. For what it's worth, Dan Ives' base case price target for Tesla stock of $1,400 per share over the next 12 months is notably lower than my base case price target for Tesla stock over the same period of time. And his $1,800 per share bull case price target for Tesla stock also below my bull case by quite a margin. If you'd like to see all of my Tesla stock price targets, don't forget you can check out the card in the corner or the link in the description to sign up to Patreon. Every time my valuation model changes, I also update my price targets exclusively on Patreon. I've got a funny feeling we'll see Dan Ives in the mainstream finance media within a few months' time, increasing both his base case price target for Tesla stock and his bull case price target for Tesla stock. Let me know in the comments below, where do you see Tesla stock in 12 months' time? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.